Hi, my name is Jordan Heidi, and I am here to submit my final submission and proposal for financial statements. Our introduction is within healthcare. There are many financial management cases that deal with hospitals needing help and direction to making the best decision for their facility. Not only do they need financial management, but they also might need performance improvements, like the Hubbardson Medical Care. We had contacted Warbird because they are a consulting partner that is qualified financial consulting firm that will help a facility with their financial, operational, and technological solutions. When we needed the help, we had contacted Warbird. Their team wanted to help HMC realize their top priority, which was to maintain and enhance the long-term financial viability of the hospital while recruiting and retaining providers and experienced nursing staff, stemming the out-migration of patients and preserving local employment opportunities. When it comes to the financial statements, all organizations rely on them to carry out important business decisions. These documents allow the managers to evaluate based on various financial analyst methods, which can involve a comparison of ratio outcomes from the financial statements. Healthcare organizations are generally concerned with 4 basic types of financial reports, which include the balance sheet, statement of income, and retained earnings, statements of changes in owners' equity, and statements of cash flows. Together, these reports are used to record the organization's assets and liabilities, results of business operations, capital balance fluctuations, and the sources and uses of financial capital. Other reports may also be used to report unique data that is specific to the healthcare organization. All of the information is then used to make important decisions regarding the organization's short and long-term goals. So with that being said, we will be using financial analyst methods. The 2 main methods are the horizontal and vertical analyst. The horizontal analyst looks at the percent change in a line item from one year to the next. Horizontal analyst is the comparison of financial information of a company with historical financial information of the same company over a number of reporting periods. It could also be based on ratios derived from the financial information over the same time span. The main purpose is to see if the numbers are high or low in comparison to past records, which may be used to investigate any causes or concern. The key difference between the horizontal and vertical analyst depends on the way financial information and statements are extracted for decision making. Horizontal analysts compare financial information over time by adopting a line-by-line method. Vertical analyst is focused on conducting comparisons of ratios calculated using financial information. Both these methods are conducted using the same financial statements, and both are equally important to make decisions that affect the company on an informed basis. After reviewing the analyst, the method I believe would best suit my organization would be the vertical analyst method. This should be used over the other methods because for my organization they are wanting to have performance improvement, and with a vertical analyst this looks over items that will benefit them in the long run. And taking the information of the year by having every line item in a percentage, analysts are able to look at what percent of the company's assets our current assets versus long-term assets, and so on. While the activity is ongoing for the organization, Warburg's ability to quickly assemble the exact mix of expertise and performance improvement initiatives have enabled Habersham to realize immediate improvement in all the areas of focus. As performance improvement integration continues with Habersham, all the efforts contemplate that this may be a part of an affiliation process. So for 2018, this is our asset breakdown. This includes cash and cash equivalents, accounts receivable, inventories, some assets held for sale, which were none, property, plant, and equipment, prepaid expenses and other receivables, and intangible assets net of accumulation, amortization, and our deferred taxes on income. This is compared to our 2017 asset breakdown. This is our 2018 liability and shareholders' equity breakdown. As you can see, in 18 we had 39%. And that includes long-term debt, deferred taxes on income, other long-term taxes payable, just other liabilities, accounts payable, accrued taxes on income, loans, notes payable. And then this is just our compared to 2017. So sorry, there was 18 and then 17. So findings of capital management influences, they are working capital management is one way companies look at their current situation and determine where they need to be in terms of cash on hand, investments, purchasing resources, and paying bills, delivering services, and collecting bills. The way it's found is the current assets are minus the current liabilities. This helps them determine if they need to seek outside funding to maintain or expand their services. Capital management helps evaluate financial statements for the decision process to make capital investments. This requires financial analyst methods. The goal of capital management is to acquire and maintain sufficient working capital and assets. So next, this is for the EHR recommendation outcome. I do think we will be able to afford the new EHR system, but comparing the 2 years of 2018 to 2017, we are able to pay down previous debt. Our stats show us that the company is seeing more consistent profits with increasing current ratios. Our cash and cash equivalents were up as well, our long-term debt being at 18.10%, which is 10% compared to our 2017. Our total current assets are the assets that is converted to cash or used to pay current liabilities within 12 months. This will be an investment to the company, but in the long run, it will really benefit the company to do better and continue to make profits throughout the new years. So in conclusion, this project was a matter of doing research and finding out the sole outcome being that we can afford the new EHR system for our facility. The financial statements and methods will really help us stay on track and to get our goals met throughout this year. Staying on top of our financial management and monitoring the ins and outs of our facility to help avoid risk and complications will make for our company to do better and achieve our goals for making this new EHR system work. And so that is it. Thank you all for listening. We really hope that our EHR system works out for the company. I know in the long run it will be a good investment for us and to keep pushing towards our goals. It is a lot of work coming up with the financial statements and which method works for us. Compared to the top two that we had mentioned, the financial statements are really what we should all be looking at. So thank you all for your time, and until the next one.